Up next, we're going to be looking at how to trade gold into the year end from HYCM. Please welcome onto the stage, Giles Coghlan.
I'll just wait for my, there we go. A very good afternoon. I'm looking forward to explaining over the next few minutes a framework about how to trade gold into the year end. I'm going to show you what the key drivers in gold are, and I'm going to show you how you can look at those drivers to see what's influencing gold and will help you be better informed about how to trade gold yourself. Let me introduce HYCM to you before I get into explaining gold. So HYCM is an established broker with over 40 years of experience. Originally, HYCM started in Hong Kong in the 1970s before having offices around the world with London, Limassol, Cyprus, and as well our office here in Dubai. We have broad regulation across a number of jurisdictions. So we have the strict Financial Conduct Authority regulation from the United Kingdom. We had the Dubai Financial Services Authority regulation here locally. We have the Cyprus Security and Exchange Commission regulation, as well as Cayman Islands Monetary Authority regulation. So we're a highly regulated broker. We take it very seriously, looking after retail's clients' deposits. Having been around for so long, we've won a number of different awards. Our most recent awards here in World Finance and Best Forex Broker 2020 for the Global Banking and Finance Awards. We're featured in numerous top-tier media. Part of my role at HYCM is to make complicated financial concepts simple. And as a result, a lot of my work is broadcast around the world. I do CNBC Arabia twice a month here, as well as the Bloomberg Ashraq in Dubai, as well as these other top-tier media publications around the world. We have a number of different trading instruments with HYCM. You can trade currencies, indices, commodities, as well as individual stocks. MT4, MT5, and a proprietary mobile trading app. It's also possible to deposit money in dirhams and withdraw money in dirhams here locally and deposit money into local Dubai banks. So it's very convenient. My role is providing education to our clients. It's something that I take very seriously and enjoy. I have over 10 years of experience in technical and fundamental analysis. I'm regularly contacted by top-tier media journalists to understand the recent market moves, and I contribute to top websites as well as Forex news sites. So this is the wrong presentation. I need the one on gold. So this is the wrong presentation. I apologize. Just while the tech team bring the right presentation on the screen, I'm going to tell you what the key drivers for gold are. So just ignore the screen behind me for a second. The key drivers for gold are as follows. The one chart that you always want to look at when you're trading gold is what real yields are. What's real yields, you ask? Real yields is when you take the US 10-year yield and minus inflation expectations from it. When you do that, you have what's called the real yield. So it's what a bond really gives you when you allow for inflation. Now, you might have heard that gold and inflation risk is a big concern. And what the real yield chart shows you, thank you tech team, that was pretty quick. What the real yield shows you is this. This was perfect timing. Do you see the purple line? That's the real yield chart. You can find this on any charting platform. The blue line is gold. Do you notice June, July, when real yields went up, gold went down. Look at August of this year. When real yields went up, gold went down. Here at the moment, as real yields are going up, what's gold doing? It's going down. So when you understand what real yields are doing, you have one big clue on what drives gold. But there's another driver. And the other driver is obviously the US dollar. Now, when you combine these two on a chart, real yields and the US dollar, you have an even better picture on what gold's going to do. So do you see here, with real yields and the dollar falling lower, dollar is the pink line, real yields is the blue line. Do you see how they're both falling lower? When real yields fall and the dollar falls, that's a big push higher for gold. Now, you can see at the moment, what are real yields doing? They're moving up. What's the dollar doing? Moving up. So what's gold doing? It's moving down. So if you trade gold, you want to look at what real yields are doing and what the US dollar is doing. If you just overlay those two charts onto a gold chart, you're going to be 95% of the way to picking your way through the gold market, making complicated concepts simple. That's one of the things I want to do for HYCM. So, and notice at the moment, when real yields rise and the US dollar rises, gold falls. Okay? This is a very dependable pattern. The other thing that drives gold prices is gold ETF demand. This was particularly over COVID-19 because you couldn't get hold of physical gold, so ETF demand is worth looking at, and you could look at that from something like the World Gold Council if you don't have Bloomberg Terminal. Seasonal factors drive gold. There's 2 times of the year when seasonally gold rises. They're here, January and August. Why? It's a very logical reason. January is the Chinese Lunar New Year. As many will know, in the Near East, in the Far East, gold is given as a store of value. It's not like the way that Westerners use gold. It's given as an heirloom, something to invest, and when currencies are maybe fluctuating, gold has intrinsic value for the family. So gold gifts are given around that time, gold prices rise. August, it's the Indian wedding season, and you tend to see gold rise. So there we see 4 key drivers of gold: real yields, the US dollar, ETF demand, seasonal factors, and finally, the Fed policy. Now, this is the bit where you've got to understand. The Fed policy impacts the US dollar side of the equation. So recently, people have been very focused on what's happening with the Fed policy, and as we know, Jerome Powell said inflation's been met and employment is all but met. He's saying we're nearly there in employment. He's saying we're going to taper by the middle of next year. He's saying that interest rate hikes are essentially looking like coming. He hasn't said that explicitly, but that's the inference. So, as a result, we've seen the yield curve steepen. Bond traders are expecting higher interest rates to come. So the pressure on the dollar is rising, the pressure on real yields is rising, and it's driven by Fed policy. So Fed policy, all the Fed speakers this week, people like me are looking, does this mean they're going to raise interest rates or are they not going to raise interest rates? All this impacts the dollar, and that in turn impacts gold prices. So we've seen yields pushing higher, 2-year yields breaking past 0.3%, US 10-year yields making its way up towards 2%, US dollar Japanese yen breaking out. On my Twitter account, I've been following all this and doing it in real time. Now, in 2013, when the Fed tapered, you saw this reaction. Gold lost value and the dollar strengthened. That's what you would expect. At exactly the same, at this point in time, yes, there's some significant difference to 2013, but understand this framework. When the Fed looked like raising interest rates, you can expect dollar strength, and that's a pressure on the dollar. Now, what would negate this would be the inflation risk. But you can look at the inflation risk by looking at real yields, because that factors in inflation, so you don't need to worry about it. So you can see here, 2013, when the real yields went higher, you see the candlestick chart, gold was slammed lower. Rising real yields sinks gold prices. I won't go into that. So the message is clear. gold could be pressured into year-end as real yields and the US dollar rises on sooner taper expectations. That's where we are at the gold market. Next week, we've got the non-farm payroll. This will be a big direction for gold. If the payroll is a big miss, it will mean that Jerome Powell was getting ahead of himself. It means that tapering is going to be longer away, which means the dollar's going to weaken, real yields are going to fall, and what's gold going to do? It's going to rise. You see, so that's a great short-term intraday trade that could be around on the non-farm payroll next week. Now, if the non-farm payroll is great, if the participation rate, see my talk yesterday's high, if unemployment is low, then that means gold prices are going to keep falling. And that wonderful long pin bar that you can see here, that big pin bar rejecting the 100 exponential moving average, long tail, short body, space to the left, beautifully technically, okay? That is going to be very interesting if we have a very bad jobs report next week. That's the thing to look for. And then watch turn of the year for a bounce in January. If China Lunar New Year is big this year, all the pent-up savings, all the people getting back together again, there'll be big physical demand for gold, so look for gold rising. December 20th through to end of January could be a nice move higher in gold. Watch it. Follow me on Twitter. I'll be flagging this up in plenty of time. You can follow my analysis at my blog. You can also follow it at my Twitter, at Giles Coghlan CCA. Connect to LinkedIn. I love to help traders. I love to help people learn. I love to make complicated financial concepts simple. I have taught and helped hundreds and hundreds and hundreds of individuals begin to understand how to trade the financial markets, some of which have gone on to trade and trying to trade professionally and moving themselves forward. Once you are taught, you can go away and you don't need someone like me because I explain the ropes. It takes time, but over like maybe 2-3 years, you can be good enough to take off on your own. So on the 1st of October, I'm doing a special All You Need to Know Trading into Year End, which is also a great introduction to the financial markets. If you're either new to trading or you're just really wanting to get stuck into trading, I'll be here on the Duke's Hotel and I will help give you a framework ahead. I also introduced retail traders to the professional tools that analysts like myself use. Many retail traders don't realize that it's not fair. You don't actually have the proper tools to do a job. Could you imagine learning to be a surgeon, but the only tools you had is what's in your cutlery drawer, like a knife and a fork? That's how it is for many retail traders. I show you what those tools are, I give you access to them, and then I show you how to use them. I just remove the smoke screen and I explain many of those concepts. Just like I've explained gold, I explain lots and lots of different concepts. You know how complicated trading can be. Do come along to that, and do come and meet me in person. I'm on booth number 22, just 50 yards on the left-hand side with HYCM. I would be delighted to explain more to you and help you and serve you in any way that I can to be a better trader. So thank you very much for your time. Thank you for your attention. I do wish you a very good afternoon. Thank you very much.